Hello everyone, I'm Chris Kapches, President of Chestnut Park Real Estate, and today I'm going to give you your March market report. I'm going to begin by commenting that there has been some reports that the market is softening, but those reports are based on the stratospheric results that we had in 2021, when literally there was, primarily driven by the pandemic, sort of frenetic buying. In my opinion, I think the market is as strong today as it was then, but it's battling some daunting forces that have caused it to plateau. And those forces that I'm referring to are one, the rising interest rates, mortgage interest rates, the war in Ukraine, which is having global consequences, obviously of an economic nature, particularly as it relates to supply chains. Continuous lack of inventory, which has been a theme in these market presentations going back even pre the pandemic. And lastly, what we're getting a lot of now is government intervention, micromanaging the real estate market. And most of that micromanagement is directed towards foreign buyers, which are perceived to be the one of the key problems in our marketplace, which I don't believe that's the case, but they're an scapegoat that's being used to justify an attempt to rein in the demand side and ultimately affordability. At the end of the day, affordability is driven by supply, and supply, as I said, is on the low side. And the numbers that were produced in March clearly demonstrate that. The average sale price came in at approximately $1,300,000, slightly less than the average sale price that broke a record in February of about $1,330,000. So we're in that range. Came down and will stay down because it's plateaued for all of the four reasons that I just mentioned: the lack of inventory, government intervention, the rates, and of course the situation in the Ukraine that's impacting global markets. So it's going to stay at that range. But if anyone anticipates that prices are going to come dramatically down, that's not going to happen. Even with continuing interest rate hikes, there's just so little supply, and I'll demonstrate that for you. In the month of March, we had about 20,000 new listings that came to market. That's almost 12% fewer than came to market last year. And last year we were very short of inventory. As we went into the month of April, we had just over 10,000 listings, less than what we had last year, for a marketplace that is catering to about almost 6.7 million people, namely the GTA. We would really need a supply of approximately 25 to 30,000 listings, and we're only a third of that. So supply is continuing to drive the market, and that's demonstrated most accurately by the number of days that the property spent on market. Almost 11,000 properties sold in the month of March. Can you imagine? 11,000 properties sold in March, and they only spent 8 days on market. 8 days on market. They had to be prepared, they had to be marketed, the sale price had to be negotiated, and they had to be reported sold, and all that took place on almost 11,000 properties in only 8 days. That is literally the speed of light for properties to be sold. That does not speak to a slow market. That speaks to a very strong, powerful market, constrained only by the lack of inventory. And that constraint is going to continue as we go forward. Now, these forces that I mentioned that are at play in the market may impact it as we go forward, particularly rising interest rates, but they'll only impact it to a certain extent because the demand will continue to be there. And while the demand is there, we will see the same situation that transpired in March, transpiring in the months ahead of us during the rest of 2022. So anticipate a strong April, very similar to March. Anticipate a plateauing of average sale prices for the factors that I've just mentioned, but anticipate those properties that do come to market still selling very quickly, but perhaps not with the multiple offers, the 5, 10, 15, in some cases over 20 offers that we saw on individual properties before. A constrained number of properties, primarily constrained by rising interest rates, but nonetheless properties will continue to sell. As I just pointed out, they'll continue to sell quickly, and they'll continue to sell for a price point on average somewhere in the $1.3 million. So I look forward to presenting the April report. I have a feeling it's going to be quite similar to the one we've just discussed at this report. But until then, look forward to seeing you. Please stay well. Everybody stay safe. Thank you.